Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead, and we've of course seen a very strong close again here for the month of December. Silver price is up 16.6% over December. Gold prices closing up 7% for the month, and also platinum prices up 11%. These times right now are providing fantastic opportunities for you to capitalize on the commodity markets. In fact, 2020 was a record-breaking year, and 2021 is gearing up to be even bigger. For ourselves and our clients, our members at the Gold and Silver Club, we've had a huge December, up 15,500 points over all of our positions, which includes our 16 trades that we have open right now, 10 positions on gold, 4 positions on silver, and 2 positions on palladium. So of course, for every 10 lots that you would be long our positions, that's 1.5 million of profits in a single month. And it's been a massive end to 2020, and it's setting up for all of our traders at the Gold and Silver Club to be a very strong 2021. In fact, overall 2020 has been one of the most profitable years on record for commodity traders. Many hedge funds, investment banks, they've announced that they've made multi-billions in 2020, generating triple-digit gains on their portfolios, trading the volatility. Commodities have become some of the best performing assets over the latest year as we transition into this commodity super cycle moving into 2021. And of course, what we've seen over the last year is the breakout's been fueled by the unprecedented levels of economic stimulus from central banks and government, providing that rising inflation expectation, the weaker dollar. There's still no clear end in sight for the pandemic. Demand from safe havens has continued to rocket, and we've seen this continue to drive the precious metals higher throughout 2020 and into 2021. Central banks, governments around the world, they've pumped more than 12 trillion into the financial markets in 2020, whilst the Federal Reserve's balance sheet has hit new record highs of 7.3 trillion. And of course, it's these unprecedented level of monetary and fiscal stimulus which has provided this backdrop to a perfect environment for you to take advantage of the commodity super cycle we're moving into. In fact, according to Goldman Sachs, as we enter 2021, we're entering into the very early stages of the commodity super cycle, which is heavily correlated to stimulus-led global recovery. And we're entering into this lucrative period where, as a commodity trader, you can dominate and really take advantage of this price action. More specifically, as we go into next week, we have the Georgia runoff elections, which are going to be taking place on Tuesday, which will determine who controls the US Senate and how much stimulus to expect this year once President-elect Joe Biden takes office on January the 20th. We have the biggest release to watch being the Wednesday's FOMC minutes from the December meeting. Traders will look out for any change in the language when it comes to stimulus concerns and economic growth. And of course, we have Friday's non-farm payroll data as well. These will provide back-to-back trading opportunities as we move into next week. We've mentioned it before, but it's much more lucrative to be nimble in the markets, regularly taking profit off the table. So with that, let's move over to the charts. We'll talk you through exactly what we're looking at as we go into a new week. So first of all, let's just move over to gold here. You will see that gold closed limit up on Friday, closed at $1,900 per ounce, up 24% in 2020 and also 7% over the month of December. So with that, we have 10 positions on gold currently. We've continued to stack these over the month of December, and we've been also nimble here to take some profits off the table as we go along. Then that gives you the ability to get back into the market again here. So as we go into next week, considering that we are closing at the weekly highs and also near the monthly highs as well, I would pay again a lot of attention to the monthly, the higher time frames, the monthly and the weekly chart here. My expectation is over the month of January, we are going to break above the December highs here. We've closed at 1900, which suggests we are going to gap higher off the Sunday open. You can no doubt see that we have this bull flag price structure going into next week. The anticipation is that we will break above the resistance here and we'll start to build up some momentum going into next week. However, what we have seen over the last couple of weeks is that we drive higher into the Asia Pacific session from the Sunday through to Monday open, and then afterwards we do see profit taking come in again as we get into the London session. So we could look out for this going into next week. We have 10 positions long on gold, but we will be very nimble in banking profits on any considerable spikes higher that we get into the Asia Pacific session. Then we have the Tuesday, the Senate vote, we have Wednesday, minutes to the FOMC, Friday's non-farm payroll. This will just provide a lot of opportunities for you to come in and out of this market. Essentially, I would be looking out for the potential to get back up towards the swing highs that were tested over the month of December, then moving into those resistance zones that were tested also over October as well, as we start to build up momentum, particularly on the higher timeframes here. So the weekly, you can see where we could come back into key areas of liquidity, retest the highs here from October, and start to build that momentum. But again, it's all about timing your entries, your trading here. It's not just a buy and hold market. Many traders got caught out over the summer where they were buying, just holding, expecting the price to continue to break out to all-time highs, and then gold had essentially a 5-month long correction, and any traders that were really caught out buying near the highs here have been in losing positions now over the last 3 or 4 months. It's much better to continue to come in and out the market, banking profits regularly. You'll make a lot more by doing so. You can see this, the price action over December, for example, the breakouts, the pullback, breakout, pullback, breakout, pullback. We've seen this regularly. In fact, even if you go over to the last 2 weeks here for gold, really all we've seen is range-bound price action from around the 1850 handle up to 1900. That's all the range has been over the last 2 weeks. So if you bank at the upper end of the range, reload at the lower end of the range, that works out really well just for trading conditions, which is perfect at the moment to capitalize on. In time, I am expecting further price action to the upside here. But again, you don't want to get caught out buying too high, catching into FOMO trades, which then get taken out and then leave you without any profit on the positions. You need to be banking profits regularly and be very nimble. Silver, again, as we mentioned previously, we've been stacking our positions between $22 to $24 per ounce. We have 4 positions on this market. Silver's looking really solid here into the close. First of all, looking at the weekly, you can see where we have already broken out of this bullish price structure. So we've already had that breakout over the last couple of weeks. I would suggest silver is leading gold by a couple of weeks at the moment. And if you look out at the monthly chart here, the price structure, the potential as we go into January to take out December highs and then really start to lead this move back towards the previous swing highs. But again, it's all about timing your entries, not FOMOing in. Silver volatility is quite large on a week-to-week and a daily basis, and it is about timing your entries and knowing when to take profit off the table. And at the moment, silver prices holding nicely around the 26.50 handle at the moment. My expectation is that over the course of the next couple of weeks here that we will start to see a rise back towards the previous highs here that were tested going back to the end of September. So I'm looking for a move back towards those sort of levels, and certainly the level that we spiked up to a couple of weeks ago, which would be the recent swing highs here. I am expecting a retest back towards those levels as we go into the month of January here. We've got 4 positions on silver. Then moving over to platinum, I mentioned this previously, that platinum was leading. Many of you that follow us at the Gold and Silver Club on YouTube will have noted where we talked about the gold to platinum ratio in a lot of detail, where we had those entries around $873 per ounce. Since then, platinum prices that broke out over $200 or 2,000 points to the upside. Platinum has had a huge breakout over the last couple of months here. It's up 11% over December. It was up over 17% over the month of November. If you have a look at platinum on the weekly chart, it has been leading gold and silver here over the last couple of months. Platinum was the first to break out. Subsequently, we saw silver break out, and then gold is now starting to play catch up. Platinum, again, I would watch it to lead going into next week and going into January as well. Once we break above that monthly high, once we really start to pick up momentum above the 1,100 level, I would expect gold and silver to follow also in quick succession. Palladium was fantastic for us last Friday. Over 1,000 point breakout to the upside in our favor on this position that we continue to maintain 2 positions on Palladium, which are currently up over 6,000 points in total over those 2 trades, which has been a massive move for us here going into the very final day of December, and essentially it closed up 4% on the week. Nice breakout to the upside. So we still got our 2 positions here on Palladium, and right now as we head into a new year, a new quarter, a new month, it is a perfect time of year for you to really upskill your trading. If you want to upgrade your income, you have to upgrade your skills, and this is a great opportunity, particularly as we're still seeing many restrictions around the world. Many lockdowns have still not been lifted. This is really the new norm as we go into 2021. You want to make sure that you're not just surviving at the moment. You want to be thriving and capitalizing on the opportunities that we have coming coming up as we go into a new quarter and a new year. There are so many opportunities in the commodity markets that you want to have on your radar, that you want to capitalize as we go into a new year. And for many technical traders over the last month, unfortunately, they've had a really hard time here. Many traders have panic sold out of their positions on the metals such as gold, silver, palladium over the latest month here, only to then see the significant breakouts, with silver up 17% over this month, gold of course up 7% over the latest month, and platinum prices also up over 11%. It wasn't the time where you wanted to be panic selling out of your positions, but of course many technical traders, they're taught incorrectly. The indicators that they're using and also the processes, the methodologies that they're using are outdated and incorrect. If you want to thrive in these market conditions, you need to be trading the same way the hedge funds, the money managers, the banks and the institutions are, and you want to be utilizing, of course, the intraday cycles, the weekly cycles, the monthly cycles. Be aware of the seasonality, particularly at this time of year, and then further compound that with understanding of what the market makers are looking at on a day-to-day, a week-to-week and a monthly basis. Key levels of liquidity that get targeted, and the reason that so many technical traders lose in the market is because the banks, the hedge funds, the market makers, the institutions, they know exactly how technical traders are taught. If you find yourself that you're constantly buying just as the market is about to tank, or you're selling just as the market reverses, this is because you have been taught incorrectly how to trade the markets. Again, commodity trading is a zero-sum game. In order for somebody to make money in commodities, there has to be someone on the other side of the trade that is effectively losing money. That is how it works in the commodity markets. Predominantly, it is the banks, the funds, the institutions that are making all the money. It's the retail traders that are taught technical trading and taught outdated technical indicators and analysis that are losing all the money. And you want to switch that round, right? In 2021, you want to be the one making the money, and you want to be the one in a strong position going into the new year. So with that, if you would like to learn a research-driven approach to the market, have access to our data, market intelligence, have an awareness and understanding of key liquidity zones, knowing when to bank profits is also just as important as knowing when to get into trades. This will help you have an edge in the markets as well. So with that, if you would like to find out more, join a community of successful traders and join the live trading room mentorship program. There is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.